There are several well-known quotations that discuss real estate investment. The only poor time to purchase real estate, according to Steve Bolton, is later. Buy land. They aren't making any more of it, stated Mark Twain. Last but not least, the renowned steel tycoon Andrew Carnegie said that 90% of all billionaires got so by owning real estate. As we can see, there is something appealing about investing in real estate. In this video, we examine the top 10 justifications for real estate investment. Please like this video and click the subscribe button before we start so that you will be the first to learn about new material. The Personal Finance and Investing channel's goal is to enable viewers to become financially independent. Joining will assist us in achieving that objective. Let's return to the video for today. Let's quickly discuss the various real estate investment options before moving on to the top 10 reasons to invest in real estate. There are several choices. Real Estate Investment Trust, or REIT. A REIT is a business that owns real estate, including offices, warehouses, hotels, apartments, and retail spaces. An investor obtains a share of such properties when she invests in a REIT. It is comparable to a real estate mutual fund. A REIT offers the advantages of exposure to real estate as an asset class and ease of entry without the headache of managing or maintaining the actual assets. Investors benefit from REITs in two different ways. First, they consistently pay investors dividends. Second, you may sell your investment for a profit if the REI's value rises as a result of the appreciation in the underlying real estate assets. The main stock markets list REITs, which may be purchased exactly like stocks or mutual funds. Residential buildings. Purchasing investment properties altogether may be profitable, but it takes more work than just purchasing fund shares. The purchase is often financed by investors via a mortgage loan, which raises the investment's risk. With residential properties, investors may profit by leasing the land or amenities, or by selling the asset once it has increased in value. Properties are normally rented out in one of two ways: long-term rentals, in which a tenant resides in the home for at least 6 months. Alternative uses for certain assets include short-term rentals, in which the asset is rented out for a few days at a time. Although the daily room charge for a short-term rental is far more than it is for a long-term rental, the vacancy rate is also significantly higher since guests often do not reserve the rental for every night. Two key businesses dominate the short-term rental industry, acting as marketplaces for both homeowners looking to rent out their properties and renters looking for a place to stay while traveling or on vacation. Airbnb.com and vrbo.com are these, vacation rentals by owner. Several things need to be taken into account when buying a house as an investment. Real estate, as the saying goes, is all about location, location, location. This alludes to the notion that the property's location is the most crucial factor. Location is also one of the asset's second and third most valuable elements. Does the property, for instance, have a beautiful view? Does it have decent public schools nearby and a pleasant neighborhood? Is it in an area with a strong POA or WA, which helps to maintain high property values, or is it in a neighborhood with lax maintenance requirements, where property values fall? Does it have surrounding facilities like parks, a swimming pool, or dining options and retail shops? How much work has to be done on the property before it can be leased out is another factor. A thorough cleaning should be needed at the absolute least, but sometimes more extensive maintenance or repairs are necessary, such as replacing the carpets, patching cracks in the walls, painting, replacing outdated or worn-out equipment, gardening, etc. A wonderful purchase price is the first step, but if maintenance and repairs will be costly, earnings will suffer. Could think about keeping some extra money in accrual as a maintenance reserve. The fundamental financials and long-term rewards of the transaction are another factor. What do you anticipate the occupancy and rental rates to be, for instance? The occupancy and rental rates will normally be higher if the property is situated in a region where there is a lack of housing. Occupancy will be greater if there are reliable job prospects nearby. If the home will be utilized as a vacation rental, check to see if there are nearby tourist hotspots or attractions that will draw visitors and encourage them to stay. If it will take some time to find tenants for the home, you will have to pay the mortgage alone without the support of a tenant who would foot the bill. Will you handle the property's management yourself, or will you hire a property manager? You must weigh the convenience of having someone take care of the property for you against the expense that you'll pay for it, as a property manager often costs about 10% of the rental money. If you expect that equipment or the property itself will need maintenance and repairs in the future, you should set aside money each month to cover such costs. The profitability of the investment is significantly influenced by the interest rate on the mortgage used to buy the home. After the 2008 financial crisis, mortgage rates drastically decreased. Beginning in 2010, the average 30-year fixed mortgage rate in the US was less than 5%. For more than a decade, it stayed at a low level until falling into the 2.5% area in 2020 and 2021. Mortgage rates have lately climbed dramatically as a result of the Fed raising interest rates to fight inflation. As of the time of this video, the average mortgage rate is currently above 6%. The monthly payment will significantly change as a result of this. Take a look at this example. The median house selling price in the US was $428,700 in the first quarter of 2022. With the typical 20% down payment and a 2.5% interest rate, the principal and interest payment would be $1,355 per month. This payment would be $2,056 per month at 6%. In such a short amount of time, this $700 difference translates into a 51% rise. The underlying economics of real estate investment have lately changed dramatically since rental rates have not grown at the same pace. Commercial properties. Purchasing or investing in commercial buildings is another real estate investment choice. Examples include residential complexes, retail stores, and office buildings. These investments have a comparable value to a residential property in that you may either generate money by collecting rent or sell it for more money than you paid for it in the future. With the exception of the fact that the costs involved are often significantly greater and the agreements and continuing administration are more sophisticated, the business model for purchasing commercial real estate is likewise fairly similar to that of residential real estate. For these reasons, most beginning investors choose to steer clear of these opportunities. Deals are often made by more experienced investors who have the knowledge, funds, and means to oversee the properties. Let's discuss the benefits of investing in this asset class now that we've discussed the basics of real estate investment. There are a number of important ones. One of the main reasons why investors choose this company strategy is its consistent cash flow. Real estate often generates monthly revenue from renters or even more frequently in the case of holiday rentals, in contrast to stocks, which typically provide highly occasional cash flow, such as an annual dividend payment. This enables real estate investors to compare the income from real estate to that of a job. Could I leave my 9-to-5 work if I can make enough money each month through real estate investments? Tremendous returns. Traditionally, investment in real estate has produced fantastic returns. Prices have increased over the long term, enabling investors to earn large returns on their investments. Long-term security. Due to the monthly income flows and the investor's intention to acquire and keep for a very long period in order to benefit from a gradual and steady price increase, real estate is often a long-term investment. Tax advantages. Investors may write off a variety of costs related to owning investment properties from their taxable income. Examples include real estate taxes, mortgage interest, maintenance costs, insurance, and management fees. Furthermore, the gain from selling the item for more than was paid for it would not be regarded as income but rather as capital gains. Compared to income tax rates, capital gains tax rates are much lower. Investors benefit significantly from this in terms of taxes. One of the guiding principles of investing is diversification of holdings. In other words, if one sector suffers, it won't have a disproportionately large impact on the investor's overall portfolio. Real estate provides diversity by exposing investors to various industries. Real estate may continue to thrive and provide appealing profits when other industries, like the stock market, may be experiencing a downturn. People must put in a lot of overtime to make a living from passive income. Real estate generates income flow with a lot less continuous work. It doesn't take a lot of time for investors to manage the properties. Rent payments are automatic and offer revenue each month with no effort. Ability to borrow money. When investing in stocks, investors must pay the whole amount of their investment in cash. For instance, an investor will need to spend $1,000 in cash to purchase $1,000 worth of shares. Investors often use financing to purchase real estate, enabling them to acquire properties that are more expensive than they are able to pay out of pocket. Leverage is the term used to describe this kind of loan use. Real estate may be added to by investors without them having to pay the whole price to purchase the asset altogether. Protection against inflation. At the time this video was published, inflation was out of control. Everything has become much more expensive, including the petrol for our automobiles, the electricity to heat our houses, and putting food on the table. In actuality, this will be a major story in 2022. Generally speaking, real estate is seen as a strong inflation hedge. In the past, landlords have been allowed to raise rents faster than inflation. Rents often rise significantly along with inflation, as it did lately. Existing real estate investors often have stable expenses for their mortgages and growing rents, making their investments even more lucrative, whereas the stock market has suffered in this climate due to rising costs and interest rates. Control. An investor has control when they own a real estate investment. When you have a job, you are dependent on your management and have a limited number of alternatives when making decisions. You have more influence over how you make financial choices if you invest in real estate. If you sell the asset, should you keep the proceeds? Should rents be increased to enhance cash flow? Or decrease rents to boost occupancy? Should you boost your investment in a renovation that would raise rents? Or do you just rent it out as is to save money and time? You have complete control over your destiny when it comes to real estate investment. Material asset real estate is a physical asset since you are the owner of the structures and a particular piece of land. Investing with stocks is a little more nebulous since you are purchasing a stake in an organization. What do you really possess, in the end? What if the business in which you invested produces services that you are unable to touch? What if the business in which you invested in shares is not successful? So what do you own? Particularly in challenging economic times, the physical element of real estate offers investors a great deal of comfort and security. This is it for today's video. What do you think of our video? Let us know in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.